Hello, it's Matthew Knight from Freelancing Support. You may have joined our free webinar this week on making tax digital for income tax for self-assessment. If you weren't able to join the call or you want to just recap on some of the key points, then here's a video to just go over the things which we covered. And if you're not already subscribed, visit freelancing.support where there's lots more resources, guides, signposting, toolkits about pretty much every topic you might want to ask about being self-employed and freelancing. But for now, let's hand over to our colleagues at HMRC.
So during today's presentation, we'll give you up-to-date information to help you get ready for when Making Tax Digital for income tax becomes a legal requirement from April 2026, and encourage you to join Making Tax Digital for income tax sooner. Just to mention that I will refer to Making Tax Digital for income tax most of the time as MTD. It's a little bit easier on the tongue when delivering a presentation. So what we'll be starting with then is planning for MTD, understanding the rules, and work out. Can you go back a slide, please? Sorry, Rob. Thank you. So what we'll do is we'll be sort of planning for Making Tax Digital, understanding the rules and work out who will be affected and when. We'll then explain how to use MTD and how you can make informed software choices. And finally, we'll sort of mention how to sign up to MTD and consider how you can utilize any benefits. Next slide, please. Okay, so what is MTD? So from April 2026, some sole traders and landlords must use MTD based on their total annual income from self-employment and property. We'll look at timelines for when you have to use MTD soon. And if you need to use MTD, you or your agent, if you have one, will need to use MTD compatible software to create, store and correct digital records of your business income and expenses, to send quarterly updates to HMRC, to make any required adjustments, and to submit your tax return by the 31st January the following year. And once you use MTD, there will also be new penalties for late submission and late payment. Next slide, please. So it's important that you have a good understanding of the legal requirements that come with Making Tax Digital so that you can consider how the changes impact you. So you'll need to use MTD if all of the following apply. You're an individual registered for self-assessment. You get income from self-employment or property or both, and your qualifying income is above the threshold, and you have made one or more self-assessment tax returns. Next slide, please. So MTD is being phased in from April 2026, depending on qualifying income. So from the 6th of April 2026, self-employed individuals and landlords with income from self-employment and property that totals over 50,000 will need to use MTD. HMRC will look at the 2024 to 2025 tax year to assess this. You will have to keep digital records, send quarterly updates, and complete and submit the end of year return to HMRC using compatible software for the 2026 to 2027 tax return onwards. From the 6th of April 2027, self-employed individuals and landlords with income from self-employment and property that totals over £30,000 for the 2025 to 2026 tax year will have to keep digital records, send quarterly updates, and complete and submit the end of year return to HMRC using compatible software for the 2027 to 2028 tax return onwards. And from the 6th of April 2028, self-employed individuals and landlords with income from self-employment and property that totals over £20,000 for the 2026 to 2027 tax year will have to keep digital records, send quarterly updates, and complete and submit the end-of-year return to HMRC using compatible software for the 2028 to 2029 tax return onwards. Your qualifying income is the total income you get in a tax year from self-employment and UK property and foreign property. All other sources of income reported through self-employment, such as income from employment, PAYE, a partnership, or dividends, including those from your own company, do not count towards qualifying income. Pension income is not included in gross income either. Next slide, please. So you may be exempt from MTD if it isn't practical for you to use software to keep digital records or submit them due to age, disability, location, or any other reason. Or if you are a practicing member of a religious society or order with beliefs that are incompatible with electronic communications. There is more information on gov.uk about exemptions and how to apply. Next slide, please. So we'll now go on to cover qualifying income in more detail. So this information is critical in terms of determining who will be required to use MTD and from when. So to assess your qualifying income for a tax year, we'll look at the self-assessment tax return that you submitted in the previous tax year to see if you need to use MTD. For example, to assess your qualifying income for the tax year 2026 to 2027, we'll look at the tax return that you need to submit or should have submitted by the 31st of January 2026. This tax return is for the tax year 2024 to 2025. After you submit your tax return, we'll check if your qualifying income is more than 50,000. If it is, we'll tell you when you must start using MTD. Next slide, please. So there's a number of ways you can work out if you need to use MTD and from when. So this is from your current tax year information. There's also an interactive tool on gov.uk to help, and also you'll receive information from ourselves, HMRC letters that will be sent to individuals. Next slide, please. So as qualifying income is based on turnover, you may not have to wait until you've completed your tax return to anticipate if you're likely to be legally required to use MTD, and you can take steps to prepare. Throughout the current tax year, you can consider your current and projected gross income from self-employment, UK property and foreign property to decide if you are legally required to use MTD and from when. Then, when you submit your tax return by the 31st of January, you'll know whether you need to use MTD. You will have already submitted your tax return for the 24-25 tax year by 31st of January 2026, so you should know whether you need to use MTD from the 6th of April 2026. Next slide, please. So to help you determine when you are affected, we've introduced an interactive tool on gov.uk. Check if you need to use Making Tax Digital for income tax. The interactive tool is available to check if you need to use MTD. The tool will help you understand if you need to use MTD and when you need to start meeting your new obligations. It will also set out the next steps that you should take in preparing for MTD and will allow you to save or print a copy of the results. Next slide, please. So we're writing to all customers who may be legally required to use MTD from April 2026, based on their 2024 to 2025 tax return. Letters are still being sent out to customers who filed 2024-2025 tax return. These letters will tell you if we think you will be required to use MTD, we'll give you more information about the changes and tell you how you can get ready and involved. We will also write to formally notify customers who will be legally required and what you need to do. Next slide, please. You will need to create and keep digital records of your self-employment and property income and use MTD compatible software to create summary totals of income and expenses by category and submit these as a quarterly update. Next slide, please. You only need to keep digital records of your self-employment and property income and expenses, such as self-employment income, including sales, takings, and fees, self-employment expenses, including the cost of stock, travel costs, office costs, and financial costs, property income, including rent, premiums for the grant of a lease, reverse premiums, and inducements, property expenses, including rent, costs of repairs, maintenance, or other services. You will note that these correspond to the boxes on supplementary pages for self-employment and income from property. Next slide, please, Rob. Simple categorization is also known as three-line accounts. So if you are self-employed and your turnover is less than 90,000, you only need to record the date, amount, and whether it's an expense or income. If you also receive income as a landlord and your turnover is less than 90,000, you also need to keep a record of expenses that are a finance cost. If your turnover is 90,000 or more, you need to fully categorize your income and expenses. Next slide, please. You can also make some adjustments in your digital records, and you can choose to do this in year or at the end of year. Next slide. Thank you. You can choose to keep a digital record of the disallowable portion of an expense in your software. So for example, you have a mobile phone bill which costs 200. The bill is made up of 125 for business calls, 75 for personal calls, which is the disallowable portion of the expense. If you choose to keep a record of the disallowable portion, you should create a digital record of the full £200 expense and the £75 disallowable portion. Next slide, please. So now we're going to look at the quarterly updates. Quarterly updates are unadjusted summaries of categorised income and expenses submitted each quarter to HMRC using MTD compatible software. Every 3 months, MTD software will total the digital records and produce summaries for each income and expense category. You'll then submit these from MTD compatible software within the quarterly deadline. It is important to note quarterly updates are not tax returns. You are not required to make any accounting or tax adjustments before sending an update. There is no payment required with the quarterly update. So please see the table that's being displayed at the moment for when the quarterly updates are due. And I'll just sort of give you a few moments to have a look at those or note those down. Right, okay, can we move to the next slide, please? Thanks. So at the end of the tax year, you will be required to finalise your income tax position using MTD compatible software by the 31st of January following the end of the tax year. When you submit your tax return, you will declare that, as you do now, the information you have provided is correct and complete, and you have finalised your income tax position for the year. Next slide, please. So, as we've mentioned, you will need to use MTD compatible software for creating, storing and correcting digital records of your business income and expenses. The software will also be used for sending quarterly updates to HMRC, receiving information such as your tax estimates from HMRC, and submitting your tax return to HMRC. Next slide, please. So depending on your circumstances and needs, you may need one item of software which can do all of these things, or you may need to link multiple software products together. For example, you might have one that you use to keep digital records and send in quarterly updates, and another for the end of year return. You can also find more information about MTD compatible software on gov.uk. Next slide, please. It is important that you make your software choices for the whole MTD journey of keeping digital records, sending quarterly updates, and completing your tax return. If you have an agent, link this to their thinking and your thinking and about who does what. Keep in mind other factors, including which accounting method you'll use and whether you intend to carry out in-year adjustments. Next slide, please. We are also introducing 2 new penalties for taxpayers in MTD: late submission penalties and late payment penalties. I won't cover these in detail here, however, more information can be found on gov.uk. Next slide, please. If you're legally required to use MTD from the 6th of April 2026, you should sign up before that date so you're prepared. HMRC will check that you're eligible to sign up based on the details that you provide. If you use an agent, they can sign you up instead, and you can choose whether you want to sign up before you are legally required to do so to help you prepare. Next slide. So digitalising our service will bring customer benefits. So by reducing the risk of unintentional customer errors, quarterly updates are cumulative and any adjustments can be added into the next quarterly update. Quarterly updates can save time when preparing and submitting your tax return, and supporting wider productivity and less time managing paperwork through use of digital tools. Next slide, please. So to conclude our presentation, here's a summary of what we've covered today. MTD becomes a legal requirement from the 6th of April 2026 based on qualified income from the 2024 to 2025 tax year. If MTD applies to you based on your 2024-2025 income, you'll need to sign up, you'll need to keep digital records, use MTD compatible software to send quarterly updates, and to submit your tax return from the 6th of April 2026. If you're not required to sign up and use MTD from the 6th of April 2026, please consider when you need to use MTD based on the information I've provided today. You can choose to sign up before you are required to do so to help you prepare. And that is the end of the presentation. So I just want to thank you for listening. We have one more slide that Rob has just displayed, and we will send these slides to you, Matthew, so you can disseminate after if you wish. And this slide just contains some of the links that we've been talking about, just easy access to get into things for yourself.
Thank you so much, Nicola. That's fantastic. We did have a few questions in the chat. If that's all right, I can surface some of these. I'll do them in order that they came through, and then there are also some questions which we had when people were registering. One question which I think was answered already by Rob: do pension contributions count under self-employment expenses for us to submit?
Okay, so I'm going to bring my colleague in, Rebecca. She's going to support
Thanks,
with
Rebecca.
the questions. So over to you, Rebecca,
course.
and thank you.
Hi, Rebecca.
Of course, no. Hi, Matthew. Thanks, Nick, for taking everybody through that presentation. Hopefully, it's cleared up a lot of questions and concerns people have had. But yeah, but on the question around if pension is included, stuff like pension, employment income, so PAYE, interest, and so on, isn't included as part of the your threshold to the qualifying income. Pardon, I just heard somebody speak there. Did somebody come in? No, sorry.
Okay,
so it's not. Yeah. No, so it's not included as part of the qualifying income. You don't need to keep digital records in here, and you don't need to include that in part of your quarterly updates. But as you do now on your tax return, which the deadline is the 31st of January following the tax year, that information should still be included in your tax return as you will currently put it in. So just in here, so your quarterly updates and your digital records, on the information that needs to be included is income and expenses from any kind of sole trade or any property. So it'll be your freelance work will probably be included in here, but stuff like pension doesn't need to be included.
There's a bit of chat in the chat about if individuals are taking income into a personal bank account. It's obviously all mixed up with their business income, business expenses, personal income. Can you just talk a little bit through about how that is reported, what they need to report, how that is handled?
Of course. So there's actually several different types of software. I know you've already came back a little bit on that, Matthew, around bank accounts. But there is a few different kinds of software. Not all software has the facility for you to link the software to your bank account. But where there is that facility, that functionality can really kind of help people who have their, because it pulls the transactions over from the bank account to your digital record. So it helps with that whole manual inputting of the information. If you don't have a separate business bank account, what the software will have the facility to be able to mark that as personal. So it kind of disallows it, doesn't include it as part of your quarterly updates.
Mm-hmm.
But if you do have software that has that functionality, and you have that functionality turned on to draw the information from your bank account, if you have a business bank account, it would really help with that, or a separate bank account completely. It doesn't need to be a business bank account. It could just be a separate personal account where you can pull that information through. It would make it easier if you have your transactions separate for pulling that information through. Less work for you to go through and mark stuff as personal. But it's whatever works for yourself personally, what your tax affairs like, if you'd like to have a separate bank account, if you would like to have the functionality that pulls the information over from your bank. A lot of options there. I know that Nick showed you the links on the final page of the presentation, and we'll drop it in the chat, but there is more information on gov.uk around what to look for when choosing software, but it's really dependent on your personal circumstances. The option is there for marking it if you have a mixed bank account.
There were a lot of questions around whether you've got
Yeah.
specific recommendations for MTD software, and obviously the links which you provided are really helpful. So I think just a response back to everybody who asked that question, do go and have a look at the links. If you're already using software like Free Agent or Xero, a lot of those large platforms are already MTD compliant. So it's definitely worth checking with your platform if you already have a tool. If you're working with an accountant, they might be able to give you some advice as well, but definitely check out those links which we'll post because there's a whole list of MTD software. one of the questions was around bridging software. I know a lot of people are using like spreadsheets and Google. Can you just talk us a little bit about, are we going to have to move away from those techniques? Are there tools which we can use to keep using our Google spreadsheets?
Exactly, Matthew. So you mentioned bridging software there, and I suppose it does what it says in the tin. It makes that bridge between software that isn't compatible with Making Tax Digital, so doesn't have that functionality to be able to send your the summary of your income and expenses each quarter, or to do your tax return. It doesn't have that functionality to send that information to HMRC. So what bridging software does, it creates that bridge between the software that isn't compatible and HMRC, so that information can be pulled from your, for example, Excel or Google Docs that Matthew mentioned, and be able to pull that information over that's needed to send to HMRC, and obviously pulls that information back from HMRC for around your in-year tax estimates as well. So it kind of just creates that bridge there. But again, the link I've just put in the chat, and that will be shared with you after this, around choosing software, explains a little bit more what bridging software is. And there's also a link on that page, which I will also drop in the chat, to a software finder tool that allows you to have a look at what all the list of compatible software is. And there's a filter on that as well that allows you to go directly to the bridging software, and it'll bring that information up, if that is the route you would prefer to go down.
Brilliant.
So this is, so the big difference between bridging software and other ones is, other kinds of software, you create the digital records within the software. For bridging software, you create the digital records within a non-compatible MTD software package, like again, Excel, and it just pulls that information over.
There's a few questions around new freelancers. So perhaps if they've only just started freelancing, perhaps they started in October of last year, but they are doing brilliantly and they're on track to pass that 50k threshold. What do they need to do in April? Are they going to fit into this? Do they need to do anything ahead of April? Are they going to be eligible? Can you just talk through around new freelancers?
So if you're a new freelancer, so you've set up within the last year or so, it's unlikely that you'll be coming in April. The reason I'm saying that is because HMRC looks at the most recent tax return that we've received. So the most recent tax return we've received is the one that was 31st of January this year, which would have been your 24-25 tax return. So if you're a new freelancer, and you haven't submitted a self-assessment tax return with that includes that information, HMRC won't know how you're doing in that way, won't know what your threshold is. So I'm making the assumption here that the first tax return you would have submitted for will be the 25-26 tax year, which isn't due until 31st of January 2027. So once HMRC has received that tax return, 31st of January 2027, it'll look at that. And then if you're over the 30k threshold, which you'll be for that one, you'll come in from next April, so April 2027 for the 27-28 tax year. That is a lot of figures there. So please watch this back if you need to, and the slides will be shared as well by Matthew after this call. So feel free to look at that information.
What I'm hearing there, Rebecca, is if you're brand new to freelancing and you haven't submitted a tax return yet, MTD is probably not going to apply to you, but it's worth checking the eligibility checker online just to answer some of those questions and make sure.
Exactly, Matthew, that's correct.
Fantastic. Questions around if they were under the threshold in 25-26, but they're having a fantastic year this year and they're on track to go over the 50k mark. When do they need to start thinking about MTD? Is it April 26 or April 27?
So if on their 24-25 tax return, so again, that's the one that's just been submitted in January, that is what HMRC will look at. So if you have over 50,000 declared of your qualifying income, so that is self-employment, property combined, on your 24-25 tax return, then you'll need to use it from April this year, so April 26. If your combined qualifying income is below the 50k mark on your 24-25 tax return, you don't need to use it just yet. HMRC will then next check your 25-26 tax return, which is due next January, so 31st of January 27. If your income is over, qualifying income is over 30,000, that's when you'll need to use Making Tax Digital from April 27.
So again, to try and summarize, tell me if I'm wrong here. Basically, whatever number you put in on your last tax return,
Yes.
that is what is going to be the eligibility check for whether you need to start doing stuff from April
Exactly. Yes.
next month.
Yeah.
Fantastic. There's a lot of fluidity. People kind of move into freelancing, out of freelancing. If somebody was above the threshold of 50K last year, but perhaps they're stepping into employment, so actually their self-employment income is dropping off entirely and they're going back into PAYE. What do people need to do in that instance? Is this purely untaxed self-assessment income? How does PAY factor into that amount?
So if you know that you're going to be ceasing income, so that means you're not going to be submitting a self-assessment tax return because you've got no income to declare, you can contact HMRC and let them know that you're ceasing income. And they'll then go through the process to mark that you don't need to submit a self-assessment tax return anymore. Alternatively, what you can do is wait until you come into Making Tax Digital. So in this example Matthew gave, on your 24-25 tax return, you're expected to come in from April. You can go through the process to sign up while you're having a look, making sure that your income is going to completely cease, and then you can contact HMRC afterwards.
Okay.
If you maybe's got a little bit of income and you need to use Making Tax Digital, but it's maybe not every month, you still do need to comply with Making Tax Digital while you're in it. So even if it's a nil sort of quarterly update, you'll still need to do that if you're in Making Tax Digital. So it really depends on individual circumstances and what your expected self-employment income's going to be during those tax years to how you approach it. But if you're going to, like say, completely cease, it's best to let HMRC know.
So realistically, because a lot of people sometimes are pushed into PAYE contracts,
Yeah.
Even if you have no income from a self-employed perspective because you're on a long-term PAYE contract, but you don't want to completely give up your self-employed status because you might go back into it next year, for instance, you're still going to have to do those quarterly returns, but just saying you've got zero income. Is that right?
Yeah, that's correct. So once you're in Making Tax Digital, unless your income's completely ceased and you've let HMRC know that, you'll be staying in for it's a 3-year lock. And basically that is just because we don't want, it'll be very confusing for a taxpayer if you're kind of yo-yoing in and out of Making Tax Digital and then not Making Tax Digital, considering the fact that you've got your tax year, your tax return isn't going to be due until the January following the end of the tax year. And if there's a lot of overlap, it can get confusing for yourself to understand which ones need to be Making Tax Digital, which ones need to be a yearly self-assessment tax return.
Yeah.
So it just kind of simplifies that. If your income remains with under the qualifying income threshold for 3 years, then you're automatically out of Making Tax Digital then. But so like I said, individual circumstances around that to which option would be best for you to kind of move forward with.
I'm actually thinking that MTD is going to be quite beneficial in some ways because it removes that January 31st kind of, oh my God, I need to get all my stuff done. So doing it on a quarterly basis might help people. If you're not over the thresholds, if you're not required to sign up, are you able to opt into MTD in a voluntary way?
Yes, of course you can. Like I said, there's a lot of benefits. If you're keeping regular real-time updates of digital records, you get to understand your business. It fluctuates a lot better as well. I know it's slightly different for freelancers, but you'll be able to see a lot better our income and expenses more in real time and how that moves forward. And like you said, it really kind of helps with that end of year rush. If you think about it, you've got a full year of receipts and income to look at that a lot of people look at when they're completing their tax return at the end of the year. Doing this within year kind of reduces that risk of losing receipts or missing off some records on your bank account that should be included. So if you go back 18 months later to look at what's happened, then it's going to be a lot more difficult to remember what a certain expense was for. as such. It does make it easier that way. And obviously it's completely up to you. You can volunteer to join Making Tax Digital at any time. And the sign-up process is the same if that's what you kind of choose to do.
But once you're in, you mentioned a 3-year lock, so you kind of committed to that for 3 years, regardless of your income.
So
Is that right?
not if you volunteer.
Okay.
If you volunteer, you can come out. I would say as well, Nick mentioned a little bit about the new penalty systems, the late submission penalties and late payment penalties.
Mm-hmm.
There's more guidance. I can drop this chat, the link into the chat. If you're in Making Tax Digital and you've moved over to the Making Tax Digital system, even if you've left it, you'll remain on the new penalty system rather than the current one. Of course, I know that won't apply to any of you guys because I'm sure you're probably in compliance, so you don't get penalties. But just to make you aware that once you're Making Tax Digital and set up to that, the new penalties would apply to you. Like I said, I'll drop that link in the chat as well.
Can we talk a little bit about the penalty side of things? Because obviously, there's an increased burden here for small businesses and freelancers, and this is 4 more chances for them to kind of face penalties. Can you just talk a little bit about what support HMRC is going to be providing, how the first couple of years of teething kind of pains might be happening? Realistically, I think this is such a significant change for sole traders and freelancers. Just realistically, what is HMRC going to do to really support small business owners through this transition period?
Of course, so there is a lot of guidance that's been updated on gov.uk at the moment to try and that's going through a lot of I suppose user research to make sure that the guidance is kind of fit for purpose and for reading. So I speak to a lot of agent representative bodies. I speak to there's a group of consultants that kind of spoken to around the guidance to make sure it's developed in conjunction. So that is being developed and updated. But it's still being updated now and increasing at the moment. There's also we have webinars that are run by HMRC that goes into a lot more detail than what Nick has went through today. And they will be regularly increasing as well as we're going through. We've got a couple of years, with 50,000 this year, 30 dropping to 30,000 next year, and then 20,000 the year after. So we've got a few years still left where we're all working on the programme and supporting taxpayers like yourselves through the changes. But alongside this as well, we're working really closely with the voluntary and community sector. So voluntary hubs like Citizen Advice Bureau and Tax Aid, for example, maybe the ones that you'll hear of more often, but also other ones like Money Advice Trust and the Good Things Foundation. A lot of them they get funding from HMRC to help support taxpayers who don't have agent representation or from a lower income. So we're working really closely with them, developing guide advisor packs to help so they have the information needed to then support the people who come to them for help. They're able to offer a little bit more one-to-one support that HMRC is not able to. But alongside that as well, I know that there's been an increase in funding in the call centres. We know that the call centres, a lot of people do contact them, and it can be a bit of a wait. So I know that HMRC are putting a lot forward into more digital routes. So those who maybe have that ability to contact via digital routes or maybe have less complex asks, they're directed that way first off to kind of self-source their questions. We've got the HMRC app now, which there's a lot of information on there that previously wasn't. You had to phone up a call centre to find, for example, what your national insurance number is. Now there's that ability to find it elsewhere. So there's a lot of money and redesigning the service to try and help people through the changes a lot more and put the focus in the right areas.
Are there going to be any kind of grace periods for people who have just not wrapped their head around it, or they're finding this really overwhelming? For instance, I recently, Companies House have just changed some things around identity verification, and I did it once, and then apparently I have to do it as a director, but also as an individual, and I didn't realize, and I got a red scary letter. Are there going to be any kind of grace periods just whilst we're working through these things to reassure people that this is something they can just get up to speed with?
Yeah, of course. So there will obviously be obviously letters reminding people of what to do and giving that kind of prompt there. And we're working with the software developers to also provide those prompts on their software to remind people, for example, to submit their quarterly update. But around the penalties that I know Matthew mentioned a little bit earlier on, for the 26-27 tax year, so that is the one coming up in April, there'll be no kind of late submission penalties for the quarterly updates during that year. It'll just be for the end of year tax return. And also as well for the first year as well, the late payment penalties, normally there's a 15-day grace before late payment penalties start applying. For the first year, there's going to be an increase to 30-day grace. So you'll still be required, obviously, to submit your quarterly updates and your tax return and pay your outstanding tax kind of bill as well. But it just gives that bit of grace for you to kind of get used to the system and how things work before the penalties can start applying. But the good thing about the late submission penalties as well is that it's a point-based system, so there's already that bit of a grace built into it. You submit, if you miss a deadline, you get a penalty point, and that builds up until there's a certain threshold before a financial penalty is applied.
Okay.
So it's not like it is currently, you miss a deadline, you immediately get a financial penalty. There's that bit of grace already built into the system there. So if you've made a mistake, you've missed a deadline. We know how easy it is to kind of how busy life can be and how I was saying earlier today, I can't believe we're already halfway through March. I don't know where the time's gone. So we know how time fly, how fast time can fly sometimes, and you don't realize what the date is. So that kind of, it's built into that. So there is that bit of grace there, and it's only if you're constantly missing deadlines, that's when financial penalties kind of start applying.
Yeah, that's good to know. Is the self-assessment submission process changing significantly here? Because obviously there's the 3 interim quarterly reports, which are just, hey, this is how I'm doing, this is what I'm tracking so far. A bit of a check-in. How significant is the change to submitting your self-assessment itself?
So you've got your 4 quarterly updates. They are just simple and adjusted summaries. So the software will total up the income and expenses from that quarter. You can just check it over, send it off. You don't need to make any adjustments. That information then feeds into HMRC and helps pre-populate your tax return. So through Making Tax Digital, to allow that kind of to process to work through and that pre-population to work, and for the tax estimate that comes in as well to work, it all needs to work in the same system. So your tax return will have to be done via your software instead of via the process you normally do. But like I said, that information you're completing on your quarterly updates, that information you're feeding through, it'll pre-populate those boxes on your tax return. So when you're doing that at the end of the year and you're finalising that return and adding in stuff like your pension or any PAYE that you have into there, that information you've already put in around the expenses and the income from your self-employment or any property income you may have into those boxes will be pre-populated. So just make that a little bit, hopefully a bit more simple and easier for you there, because some of it's already been completed.
I don't know what the numbers are. I'm sure some people are still doing paper kind of tax returns. Is this coming to an end? I mean, it's fundamentally Making Tax Digital is about HMRC moving all systems to digital returns. So
that's definitely the goal, in moving it towards digital, but we do know as well that not everybody is able to. That's why we have, Nick mentioned earlier on around digital exemptions. It's why we have that process there. So it gives that option that if somebody isn't reasonably able to meet Making Tax Digital, whether that's because of they don't have the ability there, and not unable to learn that ability, or they have, for example, they live in a really remote area where there's not a really good Wi-Fi signal and they can't keep those records and be able to reliably meet the deadlines of quarterly updates and their tax return digitally. Or even if they come from a religious society that doesn't allow that kind of interaction with internet and so on. There is that option there. They aren't the only reasons why people may meet a digital exemption. it's all personal, like all cases looked at a case by case basis as well. But yeah, there's that option there. So it's not a complete transferal. There is always going to be that exemption option. But as a whole, we are trying to move to a more digital society in the tax and that. Did it previously for VAT. This is for making tax digital for income tax, sorry. And it's just kind of moving it all onto the same system and making sure that connection's there internally as well.
I saw a question about VAT. Obviously, MTD for VAT changed a couple of years ago. Is this changing anything to do with VAT reporting, or actually, if you're already doing VAT, actually this probably is kind of similar to what you've already done?
Yeah, it's very similar. So as you mentioned, making tax digital for VAT was the first one that came in a few years ago. It's now moved on to income tax self-assessment. If you do a making tax digital for VAT, it'll be very similar. For VAT, if you're submitting on a quarterly basis, you've also got that commitment for submitting for sending in your payments and that as well. Isn't the case for income tax self-assessment, that it remains a yearly payment on the 31st of January. So that hasn't changed, but the calendar dates have kind of aligned in that space. So it kind of, if you also have that back commitment there as well, your software may potentially work for both. That's not guaranteed. Definitely speak to your software provider if you have some already for that. But the option may be there, and that may make it a bit more aligned for you if you already have a back commitment.
One final question. You've mentioned the word agent a little bit. Can you just say what you mean by that? Are you talking about accountants, basically?
Yes, we're talking about accountants. So I know agent is used across the board for a lot of circumstances, but in this case, we mean tax agent, so accountant, bookkeeper, somebody who helps you with your tax position. If you have somebody like that, it's best just to speak to them because they may have practices or processes in place. So that might affect how you also then approach your tax.
If you do have an accountant or an agent who's doing some of that stuff for you, is it them who's responsible, or ultimately are you as the sole trader responsible for making sure?
Yeah, ultimately it's a personal tax, so you are responsible for your tax. But the agent the accountant or the bookkeeper may be able to do your quarterly updates for you if that's how it works. They may not. That may be something you prefer to keep yourself. Like I said, there's a lot of ways it can work. But ultimately you're responsible. So it's really good you have that conversation so you know exactly what information you need to give your accountant or bookkeeper and when, or what parts you may retain for you to complete yourself. And what exactly you need. So it's really good to have that open conversation with them so you know what to expect and what's needed.
Fantastic. Robert, Rebecca, Nicola, thank you so much for your time. It's been really useful, and hopefully everybody's taken a few points from the conversation. As I mentioned, this has been recorded, so we will share this back with you. We will also include all of the links and resources that the team here have shared, as well as links to some of the resources on freelancing support, which just give you additional context. We're going to continue sending updates and notes around this over the course of the next few months, definitely, but over the next few years. And if you do have any further questions which you feel haven't been answered in today's call, please DM me on LinkedIn, send me an email. Definitely sign up to our Substack. We send out emails on a regular basis, little reminders which are really helpful if you haven't spotted something in the news or you didn't know about a deadline, especially useful if you're a new freelancer. We remind you about things that you probably should have known about. We also nudge you about things that perhaps are a surprise. Things like payment on account are always a surprise to new freelancers. So visit freelancing.support and sign up to our Substack. It's completely free. And if you have got any questions, please just drop me a note. Thank you to the team at HMRC for sharing today. I know they're doing lots of these conversations with lots of people, so thank you for sharing this time. Thank you all for joining. Really appreciate you coming along today. And I just want to leave a little thought with you all. I know how much of a steep learning curve there can be when you're self-employed and how much sometimes this can feel overwhelming. you're not doing it on your own, right? Self-employment doesn't mean you're working by yourself. Lean into your communities, ask fellow freelancers, ask me. We've got people like Frankie on the call who runs communities here as well. We've got lots of friends from our community coalition. There are so many people who are willing to help answer these questions if perhaps they've done it before, or figure out asking questions and getting some of the answers. So please don't feel overwhelmed. Ask lots of questions. There is lots of great resource and support out there, and get ahead of it. I think even if you're not required to do this by April, think about how you can start getting your processes set up for perhaps next year. Don't leave it to the last minute, because that's when stress really kicks in. Thank you, everybody. Lovely to see you all. Take care. Have a rest of a wonderful sunny day, and I'll speak to you all soon.